Hello, student. I, Dr. Shefali Jain, Assistant Professor, Tirthankar Mahavir University. Students, today we discuss about the cost, fixed cost and variable cost. In the previous video, we also discussed about the meaning of cost. What is the meaning of cost? Cost is the total expenditure incurred in producing a commodity. So, cost is the sum total of if and today in this video we discuss about the fixed cost. Fixed costs are those costs that do not change in the short run period of time. Fixed costs remain the same regardless of the amount of the production and sale of commodities. These costs are incurred by the company irrespective of its production. Even at zero production, the firm incurs fixed cost. A fixed cost can be defined as follows. A fixed cost is the cost that remain the same and fixed irrespective of the product of goods. So we can say fixed costs are costs that are independent on volume. Fixed costs tend to be costs that are based on the time rather than the quantity produced or sold by any business. Example of the fixed cost are rent and lease cost, salaries, utility bills, insurance, and loan repayments. So we can say that fixed cost that cannot be changed in the short time and it always remain constant. So fixed cost refers to those costs which do not vary directly with the level of output. For example, rent, interest on loan, salary of permanent staff, and insurance premium, etc. Fixed cost or is also known as supplementary cost, overhead cost, indirect cost, or general cost, unavoidable cost. Fixed cost is incurred on fixed factors like machine, land, building, etc., which cannot be changed in the short run. Payment of these factors remained fixed, irrespective of the level of output. Fixed cost remains the same whether output is large, small, or even zero. So इस प्रकार हम कह सकते हैं कि फिक्स्ड कॉस्ट जो होती है वो हमेशा सेम रहती है यदि क्या कहते हैं प्रोडक्शन हो या ना हो सपोज आई विल आल्सो टेक अ एग्जांपल सपोज you start a furniture business of making wooden chairs. You hire a shop at a monthly rent of 4,000 and take a loan of 1 lakh rupees from ICICI Bank at 1% interest per month. Now, your monthly total fixed cost will be 5,000, 4,000 as rent and 1,000 as monthly interest on loan. 1% of 1% of 1 lakh. Now you will have to pay 5,000 per month, irrespective of the number of chair production. So you can say fixed costs are costs that are independent of volume. Fixed costs tend to be costs that are based on time rather than the quantity produced or sold by your business. Example of fixed cost are rent, salaries, bills, insurance, and repayment. Some kind of taxes like business license are also called fixed cost. Since you have to pay fixed cost regardless of how much you sell, it means you have to pay fixed cost uh, in any conditions because it is not depend how much you sell or not. You should be careful about the editing fixed cost to your small business. Fixed cost is often called overhead cost. So we can say a fixed cost is a business expense that normally doesn't change with an increase or decrease in number of goods and services produced by sold by the business. And fixed costs are commonly related to the recurring expenses, not directly related to the production, such as rent, interest, payment, because you have to pay this cost. If and now I have also explained you an example that you open you start a furniture's but furniture business of wooden chair, and you take a shop of 4,000 rent and interest, and you also take a loan from ICIC Bank 1 lakh rupees on 1%. So total is 5,000. You have to pay it. So insurance, depreciation, and property taxes. Fixed costs are unrelated to the company productions of goods or services. They are generally indirect cost. A fixed cost is one of the two different types of business expenses that together produce total cost, and the other is variable cost. Now, fixed costs are expenses that aren't related to companies' operational activities. They are set for a specific period and do not change despite a change in production level. Fixed cost can be direct or indirect and may influence profitability at different points on the income statement. Unlike a fixed cost, a variable cost is directly associated with production and may change based on the output. We also discuss about the variable cost further in the PTO. Fixed cost can be used to calculate key metrics, including a break-even analysis or a company's operating level. So, a fixed cost that doesn't change with an increase or decrease in the number of goods or services produced or sold. So, fixed cost doesn't change with production level, also referred as at to as fixed expenses. They are usually established by contract agreement or schedules. These are the base cost involved in operating a business. Once established, fixed costs do not change over the life of an agreement of cost schedule. So, fixed costs are allocated in the indirect expense section of the income statement, which leads to operating profit. Depreciation is a common fixed expense that is recorded as an indirect expense. Companies create a depreciation expense schedule for asset investment with value falling over time. For example, company might company might buy a machinery for manufacturing assembly line that is expend over time using depreciation. Another primary fixed and indirect cost is salaries for management. Any fixed cost on the income statement are counted for on the balance sheet and cash flow statement. Fixed cost on the balance sheet may be either short or long-term liabilities. Any cash used to pay fixed cost expenses is shown on the cash flow statement. So we can say that company fixed cost are those costs that do not change in the short time period, but it can be changed in the long time period. So fixed costs include any number of expenses, including rental and lease payments, certain salaries, insurance, property taxes, interest expenses, depreciations, and some utilities. For example, someone who start a new business would likely begin with fixed expenses for rent and management salaries. All types of companies have fixed cost agreements that they monitor regularly. While these fixed costs may change over time, The change is not related to the production level. Instead, changes can stem from new uh, for, uh, for new contract agreement or schedules. So fixed costs are usually negotiated for a specific time but can't decrease on a per unit basis when they are associated with the direct cost section of the income statement fluctuating in the breakdown of the cost of goods. So I think you have to understood what is the fixed cost. Now we see the example of fixed cost include depreciation, rent, insurance, advertising, plants, superintendent salaries. So fixed cost explanation. I have also discussed about these examples. So fixed cost explanation. Fixed cost or constant cost are costs that are not affected by an increase or decrease in production. I have also कि जो फिक्स्ड कॉस्ट होती है वो कभी भी प्रोडक्शन बढ़े या घटे उससे उस पर कोई भी अफेक्ट नहीं पड़ता है. That is to say, fixed cost remain constant. If you, as fixed cost is a rent, if any person yeah, any businessman take a land for rent, he have to pay. चाहे उसका प्रोडक्शन बढ़े चाहे घटे लेकिन उसको रेंट तो पे करना ही पड़ेगा. या उसने पैसा लोन लिया है किसी बैंक से या किसी से तो उसको इंटरेस्ट पे करना ही पड़ेगा. सो दैट इज टू से fixed cost remains constant for a given period despite changes in production volume. अगर उसका ये है कि उसका प्रोडक्शन सब जीरो भी हो उसने भी मैंने जैसे एक एग्जांपल में बताया था कि एक व्यक्ति है एक सपोज एनी व्यक्ति उसने स्टार्ट किया बिजनेस मेकिंग वुडन चेयर. उसने 4,000 रुपए में कोई शॉप किराए पर ली. तो सपोज उस महीने उसका एक भी प्रोडक्शन ना बने. उसका एम है कि वो उस महीने कम से कम 100 चेयर बनाएगा और सपोज उसकी एक भी चेयर ना बने भी उसको रेंट तो देना ही है और उसने साथ में बैंक से लोन भी लिया 1 लाख रुपए और उसको 1% उसको इंटरेस्ट भी देना. तो उसको उस महीने 5,000 रुपए पे करने ही पड़ेंगे चाहे वो चेयर का प्रोडक्शन करे. और सपोज उस मंथ उसने 200 चेयर बना ली उसने प्रोडक्शन बहुत ज्यादा कर लिया तब भी उसे इतना ही रेंट देना पड़ेगा. ये तो है नहीं कि दुकान का उसे ज्यादा रेंट देना पड़ेगा या इंटरेस्ट जिसने लोन लिया है उसका ज्यादा वो करना पड़ेगा ऐसा नहीं है. सो दैट इज टू से फिक्स्ड कॉस्ट रिमेन कांस्टेंट फॉर अ गिवन पीरियड एंड changes in production volume. For practical purpose, this definition of fixed cost can be changed scientifically. A fixed cost will change over time due to a situational factors that are not impacted by a firm's activities. Rent or taxes may change. As such, a cost is fixed only within a limited time period. Hence, the reference to a time period is essential for the concept of the fixed cost. It implies that in the long times our costs tend to be variable. Suppose it 15 days का टाइम है तो इट इज अ लिमिटेड टाइम शॉर्ट टाइम. और किसी पर काम आ जाए भाई उसके पास एक ही शॉप है तो वो 15 डेज में तो एकदम शॉप ढूंढ नहीं सकता. तो द डायग्राम बिलो इलस्ट्रेट द कंसेप्ट ऑफ फिक्स कॉस्ट. तो फिक्स कॉस्ट हमेशा total cost are shown by a straight line drawn parallel to the x-axis because fixed costs do not respond to change in the volume और एक्टिविटी. क्योंकि जो अगर मैंने अभी बताया कि चाहे प्रोडक्शन इंक्रीज हो या डिक्रीज हो तो जो फिक्स्ड कॉस्ट होती है वो हमेशा पैरेलल रहेगी एक्स एक्सिस की वो चेंज नहीं होगी. क्योंकि शॉर्ट टाइम पर तो चेंज नहीं होगी लेकिन लॉन्ग टाइम पर व्यक्ति अपने प्रोडक्शन की हिसाब से और भी चीजों को खरीद सकता है जैसे और भी शॉप्स खरीद सकता है और भी ज्यादा लोन ले सकता है. लॉन्ग टाइम पे तो ये चेंज हो सकती है लेकिन एक फिक्स टाइम पर एक शॉर्ट टाइम पर ये चेंज नहीं हो सकती. नाउ वी डिस्कस अबाउट द यूजेस ऑफ फिक्स कॉस्ट यूजफुल इन इवैल्यूएटिंग ब्रेक even analysis helps with pricing strategy. I have also discussed it. Help in decision making and help in controlling variable cost. Fixed cost help businesses project and predict their current and future needs. Here are a few ways businesses used fixed cost to better understand their production needs and monetary interest, as it is also helpful in profit stability. If a business has a fixed cost that are too high, a deep in sales can make their profit margin all faster than one that has moved variable cost and practice content. So it is also helpful in the accountant. Accountant also use fixed cost as a part of a number of calculation and reports they prepare for stakeholders. Without clear understanding of fixed cost, they would be unable to do these standard accounting practices. And fixed cost can be create economics of scale where the per unit price of production drops over time as production of unit increases, resulting in greater profit. And the fixed cost per unit can impact business decision and help increase profit margin. So I think you have to understood the fixed cost. You can also determine the fixed cost. The first step is determining fixed cost is to list all the cost your business incurs. Some of these costs will be fixed and some will be variable. Good first step is determining fixed cost is understanding the total picture of cost as it relates to the business. And sometimes when people start collecting their cost information, they miss these items which are easy to overlook. So pay special consideration to following fixed cost as labor, the cost of labor and and maintenance cost and all and rent interest also include the fixed cost. Now we discuss about the variable cost. Variable costs are those costs that change directly as the volume of the output changes. As the production increases, variable cost also increases. As the production decreases, variable cost also decreases. And when the production stops, variable cost is zero. So variable cost are cost that change as the volume changes. Example of variable cost are raw materials, piece rate, labor, and production suppliers, commissions, delivery cost, packaging and credit cards fees. In some accounting statement, the variable cost of production are called cost of goods sold. So variable cost refers to those which vary directly with the level of output. For example, payment for raw material, power, fuel, wages of casual labor, etc. Variable costs are incurred on factors like raw material, direct labor, power, changes with change in level of output. It means variable cost rise with increase in the output and fall with decrease in output. Such costs are incurred till they are in production and become zero at a zero level of production. Variable cost is also known as prime cost, direct cost, or avoidable cost. So in the diagram, you can see that a variable cost does cost which change in short run and long run time. It always keeps on changing. Mean, yeah, keeps on changing. These costs are incurred during the production process and thus are the cost incurred for implying various factors of production. A fixed cost becomes a variable cost in the long term. A variable cost is defined as follows. A variable cost is the expenditure incurred on the production of goods, therefore is ever changing. As you see in the diagram, it's going up as a production is increasing, the variable cost also increasing. And when production is zero, the variable cost become also zero. So a variable cost is an expenses that changes in proportion to how much a company produces or sell. Variable cost increase or decrease depending on a company's productions or sale volume. They rise as production increases and fall as production decreases. Examples of the variable cost include example of variable cost include a manufacturing company's cost of raw material, packaging, or a retail company's credit cards, transactions fees, or shipping exchanges, which rise or fall with the sales. A variable cost is an expense that change in the proportion to production output or sales. When production or sales increases, variable cost increase. When production or sale decreases, variable cost decrease. Variable costs stand in contrast to the fixed cost. As I have also discussed about the fixed cost, which do not change in proportion to the productions or sales volume. Variable costs are a central part in the determining product's contribution margin, the metrics used to determine a company's break-even or target profit level. Example of variable costs include raw material, labor, utilities, commission, or distributions cost. So, in simple, we can say that variable cost incurred while any business consists of variable or fixed cost. Variable costs are dependent on production, output, or sales. The variable cost of production is a constant amount per unit produced. As the volume of production and output increases, variable cost will also increase. When fewer produced, the variable cost associated with the production will decrease. So now we discuss. I think you have to understood what is the variable cost. Uses of variable cost helps in set prices for commodities, as I have also explained. Help to plan profits. Help in decision making and help in cost control. So these are the usefulness uses of the variable cost. So now we discuss about the distinction between fixed cost and variable cost. Meaning, fixed costs are costs that are fixed and have to be incurred irrespective of the production of goods. It means fixed cost is referred to as the cost that does not register a change with an increase or decrease in the quantity of the goods produced by a firms, while variable costs are costs that are not fixed and keep on changing as per the production of goods. So we can say variable cost is referred to as the type of cost that will show variations as per the changes in the level of production. Now, nature. These costs are fixed. So we can say it is time dependent and changes after a certain period of time. And fixed cost is fixed in the short time. And these costs are not fixed. So the nature of the variable cost is volume dependent and changes based on the volume produced. Now, occurrence. These costs occur even when there is no productions of goods. It means fixed costs are incurred irrespective of any units of produced. And while variable cost, these costs occur only when there is production of goods. It means variable costs are incurred as when any units are produced. And uh, changes. Fixed cost only change in the long run. So fixed cost decreases with an increase in the number of unit of produced. Um, and Fixed cost decreases with an increase in the number of unit of produce. Sorry, fixed cost remains the sum irrespective of the number of units produced. Production, and its change when the number of production increases, it also increases, while variable cost change in the short run as well as long run. And the producer can change variable cost in the short run also, as he needs more raw material to increase the production, so he can change fixed cost, and he wants to take more workers, so it can be changed. And other name for fixed cost are overhead cost or supplementary cost, while other name for variable cost are prime cost. Example: depreciation charges, maintenance cost, property taxes, interest, rent, salaries are the example of the fixed cost, while electricity charges, raw material purchases, conveyance, salaries and wages, etc., and labor cost, cost of raw materials, commissions are the example of the fixed cost. So, uh, high production result in reducing the cost and increase the profit. And if a high production result in reducing the fixed cost and increase the production, while there is no impact on profit with the level of production of the variable cost. So in strength, I think today you completely understood what is the fixed cost, what is the variable cost, what is the uses of fixed cost, and the uses of variable cost, and what is the distinction between fixed and variable cost. Thank you, Stan. Thank you very much.